Procter Gamble has just beat earnings. This is a Dividend King down 20% year to date. So is it a buy? Let's take a quick look and figure it out. I am Nick. This is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor, just a guy who wants to share my love of dividend growth investing and building financial independence with passive income. Full disclosure, I am a Procter Gamble shareholder. It is in our Dividend Growth Income portfolio, which we are buying here publicly on the channel. I'm also a customer, as you likely are as well. Some of their top brands are Always, Bounty, Crest, Dawn, Febreze, Gillette, Head & Shoulders, Oral-B, Pampers, Tide, and Vicks, among many, many others. I'll give you my opinion on the stock now. I do think for long-term investors, Procter & Gamble is almost always a buy, and that is because I consider it to be one of the top 5 dividend stocks of all time. A true buy and hold forever stock with a dividend as reliable as it gets. Guys, we're talking about 184 years of being in business, 132 years of paying a dividend without a reduction, and 66 years of consecutive increases, making it a Dividend King. This is the company that is almost as old as the United States of America, with brands whose products are in practically every American household. And by the way, these products are sold in 170 plus countries. With all that dividend history, the dividend raises keep coming at an average rate of 5% per year. Some signs point to Procter & Gamble being undervalued, and I say that relative to itself. It is a quote-unquote pricey stock. I'd put it in the same category as Coca-Cola, where the name and the dependability have it selling for a premium. Now, the average 5-year PE is 23.5, but as of the publishing of this video, it's dipped below that at 22.2. The dividend yield is 2.82%, while its 5-year average is 2.56%. Again, this is an indication of a stock that's below its normal value. If you wanted to wait for a 3% yield, your price is $121.67. We've not hit a 3% yield with PG since 2019, early that year. And at that price, I would begin buying the stock heavier. Simply Safe Dividends rates Procter & Gamble with a safety score of 99. Good old reliable. This is a sleep well at night dividend, about as safe as a dividend can be. The payout ratio for Procter & Gamble is very reasonable for a consumer staple, 63% of both earnings and free cash flow. Well covered, with more room to grow. Another positive is that Procter & Gamble is buying back shares every year. There were 2.93 billion shares outstanding in 2013, and in 2022 there are 2.54 billion. As shareholders, our piece of the pie has grown, as with less shares outstanding, the more our shares are worth. Now, I'll bring up my valuation spreadsheet here just so we can see how Procter & Gamble holds up across some different valuation models. Like I said, it trades pricey. I'm buying it, but it's good to know the valuation of what we are buying. Of course, these are based off projections I'm making, and they could be wrong. So I add in the ticker PG and the current share price of $129.56. The annual dividend is $3.65, giving us a 2.82% yield. And I've entered in a forward PE of 22.3 and a forward earnings per share of $5.84. First, we'll look at Graham's revised valuation. I went to Yahoo Finance to see what analysts project for Procter & Gamble's growth. It's 5%, and that looks reasonable to me. The current yield of the AAA bonds is 4.57. A year ago, this is around 2, and at that rate, Procter & Gamble would actually be undervalued. But today, unfortunately, these rates are climbing, causing these valuations to decline. I think the idea is you can get a safer return from bonds and such with higher rates. Anyway, this provides a fair value currently of $67.47. Moving on to a dividend discount model, we have a 5% historical growth rate, and this has been consistent, so I'm going to stick with that. At a 9% discount rate, this gives us a fair value of $95.81. I almost wanted to go with an 8% discount rate because this is a defensive play. And that would have given us a value of $127.75. So you can kind of see how this moves things. But I'm going to keep it at 9% since that's what I've been doing for everything else, to be fair. This is a moderate yield, low to moderate dividend growth stock, so it's not going to be valued high on this metric. But again, I'm buying this for dependability. Discount cash flow valuation works quite similar to the dividend discount model, but instead of figuring out the present value of future dividends, this gives us the present value of future cash flow. We add all that up and divide by the shares outstanding. Now, PG's current free cash flow is about $13.5 billion, and there are 2.54 billion shares outstanding. This gives us a fair value of $93.77. As we mentioned earlier, the dividend yield is 2.82%, and this is 10% higher than its 5-year average of 2.56. And if Procter Gamble were to revert to this average yield, it would be priced at $142.58. Things often revert to the mean, and it wasn't long ago that Procter & Gamble was trading right around this range. The fifth model I like to look at is PE mean reversion. Simply put, it's what the share price would be if forward price to earnings reverted back to its 5-year average. In this case, that would be $135.49, pretty close to its current value. Finally, I like to factor in the average analyst price target. I think there's something to be said for sentiment, especially around a classic Dividend King like this. The price target is sitting at $148.60. By the way, the 52-week high is in the mid 160s, so this seems entirely plausible to me. Factoring all this together, I have an estimated fair value around $114. That's $113.95 to be exact. The current price would have to drop about 12% to get there. If it did that, I'm buying even heavier. I think this sweet spot is, like I mentioned earlier, getting at that 3% yield, which is right around $120. But I'll still dollar cost average into this one regardless, as I see it as a staple that belongs in just about any dividend portfolio, just for that reliability. That's just me. Take it for what it's worth. My estimates could be off, calculations could be wrong, and as always, do your own due diligence please before buying into stocks. I hope you found this helpful. There will be more to come on Procter & Gamble in future videos, so hit that subscribe button to stay in the loop. Also, if you could toss me a like, it would really help me out with the YouTube algorithm. Please also follow me on Twitter at DivGrowthIncome. Love connecting with you guys. I appreciate all of the great comments you've been leaving as well. Until next time, guys, keep investing.